with the consolidation working paper, and the entries here in the consolidation working paper would involve: first, we debit to common stock of S company to eliminate the common stock account. Then we also debit to retained earnings. To the same reason, we are going to eliminate the retained earnings account. So the elimination entry will credit to: first, credit to investment in S company in the amount of 288,000. That 288,000 is corresponding to the equity interest acquired by P in S. So we have computed that earlier, and that's equivalent to 80% of the equity book value of S. And the excess is now the non-controlling interest for 72,000. So again, the entry is to debit common stock as company 240,000. We debit retained earnings as company in the amount of 120,000. Credit to investment in S company 288,000, and credit non-controlling interest for 72,000. Since the total consideration paid by P company is in the amount of 372,000, and the credit to the investment account in the entry is a credit to 288,000, meaning we have to credit your investment account further by the amount of 84,000. That's the difference between 372,000 and 288,000. Okay? In our entries above. That's part of our requirement number 5. Okay, so for the entry, we now have this in the previous requirement. For the entries in the previous requirement. Okay, I'm now going down medyo 84,000. That's for the difference between 372,000 and 288,000. We have the difference of 84,000. That's the allocated excess. And that allocated excess of 84,000, we have the breakdown again, 72,000 for the under overvaluation. So we have the positive partial goodwill in the amount of 12,000. So we now involve these figures, and I know that you are already familiar with this in our requirement 1B. So again, for the consolidation entries, we now debit to common stock as company 240,000, retained earnings as company for 120,000, credit investment in as company 288,000, credit non-controlling interest for 72,000. Further, we have to debit inventory by 6,000, debit niha accumulated depreciation equipment by 96,000, debit accumulated depreciation building by 192,000, we debit to land 7,200, debit discount on bonds payable for the amount of 4,800, and then we are going to debit goodwill for 12,000. Debit goodwill for 12,000. Now this is partial goodwill approach. And then we credit the account building for 216,000. We credit non-controlling interest for 18,000. Credit non-controlling interest for 18,000. And we also credit to investment in S company for 84,000. So the total credit to the investment in S company account is 288,084,000. That makes it a total of 372,000. Okay? Then further for our entries, we debit to the next entry is to debit cost of goods sold for 6,000. Then we also debit depreciation expense for 6,000. Debit accumulated depreciation of the building because of overcharged depreciation. So we debit accumulated depreciation of the building, 6,000. We also debit to interest expense for 1,200. This is because of your amortization of discount for 1,200. We debit to goodwill impairment loss for 3,000. Take note that the total impairment loss on the goodwill is 3,750. So these are your debits. Now, will you take note of the arrangement of the accounts? Medyo nagasaot. So, we credit to inventory for 6,000. Credit accumulated depreciation for 12,000. Credit discount on bonds payable 1,200. No? And credit goodwill for 3,000. Credit goodwill for 3,000. Here you will notice in our entries that in the previous entry we debited goodwill for 12,000, and now we are crediting goodwill for 3,000. In other words, the net amount of goodwill is 9,000 under the partial goodwill approach, and that amount of goodwill of 9,000 is our debit to goodwill in our balances in requirement number 2 in our worksheet. Take note that we debited to goodwill 9,000, and it's due to the difference between here 12,000 debit to goodwill upon acquisition and credit to 3,000 for the impairment loss on the goodwill. That's why we are crediting goodwill for 3,000. That is an impairment loss. So the rest of these figures, you can already see in requirement 1B. And we have analysis of the goodwill. Therefore, the goodwill impairment loss is 3,125. Actually, the loss is 3,750, not 3,125. The goodwill impairment loss is 3,125. No, it's supposed to be 3,750 based on 100% fair value or full goodwill, and would be allocated as follows. Attributable to P or the controlling interest equal to 80% of 15,000. So you get 3,000. And to S, 20% or 750. Down, we have the next entry. To close, we now debit to dividend income 28,800 for the dividends received from subsidiary. We also debit non-controlling interest 7,200 and we credit to dividends in the books of S for 36,000. Now, for the non-controlling interest in net income of subsidiary, we now debit to non-controlling interest in net income of subsidiary and credit to non-controlling interest. We have the computations as I have already given you this, 9,360. And we have the last requirement. The last requirement here is for your working paper. And the working paper now that we have to prepare, actually the figures that you can find in the worksheet, that's in requirement number 2, can be supported by the working papers figures. So we now have your worksheet or the consolidated working paper. First, we have the partial goodwill approach. We have sales. In the book, we are given the amount of sales for the parent and for the subsidiary. So we have now for the parent in the amount of 480,000 and that of the subsidiary in the amount of 240,000. So we have 480 and 240. So consolidated working paper here. Then we have your dividend income eliminated as this is considered to be an intercompany transaction. Now you will notice that in our elimination entries, we have already debited to dividend income in order to close. So we have now the total revenue. And for cost of goods sold, we are adding the cost of goods sold of P and that of S. So the total of 348,000. And then we add, by the way, in our cost of goods sold, we have a debit, meaning an addition, because of the undervaluation of the inventory. So we are now adding 6,000, giving the total of your cost of goods sold. Then for depreciation, we are also treating depreciation. That's for 60,000 plus 28,000 plus 6. So what are now the figures for your depreciation for the worksheet? So depreciation, 60,000, add 28,000, and then we are debiting 6,000. Okay? So that will give you a total of how much? And here we are having 1,200. Okay? Will you take note? 1,200 is interest expense. We have other expenses totaling 66,000. And we have goodwill impairment loss, negative 3,000. So we have now the total of 508,000. Now, will you review on your depreciation? Everybody, you try to review on your depreciation. We cannot get the amount there, no? Depreciation, take note, 60,000, we are adding 28,000. That's found in the book for the amounts of depreciation, uh, given balances 60 and 24. 60 and 24. So will you try to make correction? 60 and 24. That will be 88, and that's a total 84 na lang. So we add 6, that will be 90. Take note. So the total cost consolidated is 508,200. We have the net income consolidated is 211,800. Now, you are familiar with these figures already because I have given to you and in the previous. So 211,800, we deduct 9,360, we have your last amount of 202,440. That's your net income to retained earnings. Okay? Then we have this statement of retained earnings for P company, and we eliminate the retained earnings balance of S company. Net income from above, here we have 202,400 added to the retained earnings of the parent. We now get the 562,440. And then we are adding the amount of, 562,440. Then we deduct the dividends paid. Dividends paid amounting to 72,000. That's paid by the parent. So the retained earnings balance on December 31 is 490,440. Okay, so that's the last amount there. Then we go to the consolidated balance sheet. We have the total cash. These are the amounts that we extended to the worksheet in requirement number 2. So you can just look at the columns here. Accounts receivable, inventory. Then we have for land, and we have the equipment account. Now take note that these balances are before deducting accumulated depreciation. However, in requirement number 2 in the worksheet, we were told to compute for equipment at net. So we already deducted accumulated depreciation. Okay? So the equipment total, and then we have your building with a corresponding adjustment for 216,000 a credit. So the consolidated balance is 1,044,000 for your buildings. Discount on bonds payable is only for 3,600 because of the amortization already recorded for the year 2000 X4. Goodwill is a balance of 9,000, and we also extended that in our worksheet in number 2. So for the totals, actually, this will not coincide with our totals in the worksheet in number 2 because this equipment and buildings are shown at gross amounts. Okay? Then for accumulated depreciation, we are adding those of the parent and the subsidiary, but we have the corresponding adjustments to accumulated depreciation. So the net amount is 147,000. For the equipment, for the building, 495,000 after the adjustment. Take note that your accumulated depreciation building, we are debiting 6,000 because the building account, there was an amount for adjustment which is stated to be over. Okay? So we have accounts payable, 240,000. These bonds payable, 360,000. But take note, in our solution, we are deducting discount for the amount of 3,600. Whereas in this solution, discount is included by our author in among the assets. So what you will be doing to conform with our worksheet in number 2, discount on bonds payable should be shown in your deduction from bonds payable, though that will affect the total. Here, discount on bonds payable is among the assets. So, non-current assets at that. However, if we deduct it from bonds payable, that will change the amount of our bonds payable from 360,000 to
Nice.
356,800, no? If we deduct the amount of the amortization. However, that will have a corresponding entry for your discount. Here, but anyway, you already have the entry for discount. The only difference is the treatment of discount. In the solution of the author, it's part of the assets. In our solution, it's part of the liabilities, being a deduction. So will you reflect transfer 1,200 or discount, you transfer it under your liabilities. Just carry it fully. A discount, instead of including it among the assets, include it under your bonds payable. Though you will have the same entries for 8 and 1,200. I hope you understand what I mean. Class? Hello?
Yes, ma'am.
In yung discount, you have moved it down. Instead of among the assets, you move it under bonds payable, though the entries are still the same. Okay? Though that will affect your consolidated balance. Okay. Then we have your amount of retained earnings from the parent and subsidiary, and we have the total, and now we have the adjustments. So we have now the non-controlling interest amounting to 92,160. So we have this by adding 72,000, 18,000, and 9,360, but deduct 7,200. Okay? So that will give you, again, take note that your totals, if you transfer discount from among the assets to the liability portion, now that will affect your total. So I hope you will correspondingly adjust on your totals. We have been talking about that in the previous requirements. Okay? The rest of the requirements are in relation to number 3 still in connection with the partial goodwill model, and with number 4, in connection with the model, partial goodwill, and number 5, and finally number 6 for 2000x5 partial goodwill model. Okay, so we are now dealing with the partial goodwill model for the year 20x5. That's the year subsequent to acquisition. So in the partial goodwill model, again, we have the same elimination entries for debits and credit. The only difference here are the amounts of adjustments in the figures shown in your elimination entries. So we now get the non-controlling interest here with the corresponding adjustments. Okay, so we will have this try to continue with all the solutions printed PDF up to the worksheet for the year 20x5. And take note that by now we are using the cost method of accounting as compared to the equity method. That's why I am trying to reach the equity method by tomorrow. So at least you will have ideas about the cost method and the equity method. We will try to compare. Now, I will not give you the equity method for your assignment tomorrow. I will just again have the PDF for that. Very,
Nice.
very long solution. But you try to answer the multiple choice problems in chapter 3 of our basic text. We have so many problems here. For your multiple choice, I hope answering this will help you in the midterm because our midterm will involve chapters 1 to 6. But maybe more will be taken from chapters 5 Gidya and a little of chapter 6. So maybe your midterm, the composition of that is from chapters 1 to 4, I will just get 30%. Okay? And then from chapters 5 to 6, the remainder of 70%. As you all know that we already had the long problem involving chapters 1 to 4. So I'll repeat for the midterm, which I'm going to give on Tuesday. For the midterm, alang-alang gid class mag-Monday, ha? So for the midterm, the composition will be from chapters 1 to 6. However, chapters 1 to 4, I'll just get 30%. And the rest will be 70%. Now, for the types of the exam, since this is midterm, I will get again true or false only for 20 items, and then multiple choice theory for another 20, and the multiple choice problems for a total of mag 100 kita. So mga 120. Ang aton nga multiple choice problems, I will give 40 times 2. So repeat, true false 20, multiple choice theory 20, multiple choice problems 80. So that makes it a total of 120 points. Now, for the 120 points, I will get most of the multiple choice problems from chapter 5. Makuha man ko sa 6, but very, very few. Very, very few. I think why tama discuss maayo. So, for your assignment, just take note. We have a long, long list of multiple choice problems. Mas-select lang ako, kay do ka damo gid ni. So, will you go to questions number 1 and 2, 3 and 4. Then, we involved 6 and 7. Then, 12 to 16. 12 to 16. The next one will be actually, the questions are very long. According to the problem here, 17 to 20. Actually, it's 17 to 28. 17 to 28. It's a very long problem. 17 up to number 28. Okay? And then, number 17 to number 29, 30, 31. Okay? Kadamo gid class. And go as far as 51 up to 63. 51 up to 63. Okay? 51 up to 63. Then, we go to the equity method. For the equity method, we will again take up long problems, 75 to 85. 75 to 85. And the last, 92 to 116. 92 to 116. Okay? 92 to 116. Okay na for the multiple choice? I hope you will answer yourself the multiple choice. We have not enough time to explain further on the multiple choice problems. So I hope you will do it. I will give you the final answers. Our closing date for the first term will be on October 6. That will be our final midterm. So meaning next week, we still have 5 days. The last week, we have another 5 days. And our final exam will be on October 6. So barely mga 2 na lang class ka weeks, excluding tomorrow. 2 weeks, pero ang pinakabugat diri nga chapter is chapter 5. That's why chapter 3. That's why pwede lang ka extend kita for chapter 3. Okay? Now, ang question ko, diin na ang inyong mga scores. Kay ang evening class, ang ginhimo nila naga-dictate lang sila ila answer, ambot hindi ko na ibalaan kabalo. Naga-dictate sila pag lawag abi pareho ni lawagon ko ang una. Ginapatay anay ang iban nga kwan nga audio. Pinapatay ambot kung kabalo ka muna